Everything you're about to hear is for education and entertainment purposes only. Whilst we are licensed, we're not aware of your personal financial circumstances. Any advice is general advice. Equity Mates operates under Australian Financial Services Licence 540697.
Equity Mates!
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Equity.
Welcome back to another episode of Equity Mates, a podcast where we explore what is possible in the world of investing. If you've just joined the show for the very first time, a huge welcome to the Equity Mates community. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you?
I'm very good, Bryce. Very excited for this episode. We have another big one. We're going to talk about the news that is moving markets, and all markets have been moving. We're then going to be joined by Mr. Beat Up, who is someone we introduced to the show last year who keeps a particular eye on beaten up stocks for a potential turnaround.
Yeah.
And then we're going to close it out with some of the worst financial advice we've heard.
Before we jump in, a reminder that this is the last opportunity you have to help us out and complete the Equity Mates community survey for 2025. It helps us understand who is engaging with Equity Mates and how we can continue to improve our content for you guys.
Now, the suggestions have been rolling in over the past few weeks. Some of the suggestions we've got so far: make episodes longer, more content with Luke Larrative,
no,
kick the obsession with ETFs,
nah,
a dedicated AFL podcast.
No.
And I promise that wasn't me. So look, if you agree with those suggestions or you disagree, this is the chance to have your voice heard as we plan 2025 and beyond. So please help us out. The link is in the show notes or the YouTube description.
News and markets.
All right, Ren, let's get into the news and markets. Today, we are going to talk about Trump's tariffs and the Aussie stocks that are impacted, Australia's house prices. Is it good news for buyers? And my statement of advice has finally come through.
Yes,
So,
excited to hear what the go
news
is
of the
there.
day.
But look, we really can't start anywhere else other than Trump's tariffs.
No.
They have moved markets and they're top of the headlines around the world. If you haven't, if you're not across the news, Trump he announced he would impose 25% tariffs on Canada and Mexico, and 10% tariffs on China.
Yes.
At the same time, he also closed a small parcel loophole, which gave tariff exemptions for parcels worth less than $800, which may not feel big, but it was a big way that Temu and Shein, some of those Chinese companies, were able to grow massively in the US and sell things so cheaply. It's also worth noting the EU have come out and said they're looking at shutting a similar loophole. So that's just a small side piece worth noting. But back to the main tariffs, an estimate from Bloomberg suggested that these tariffs would increase US inflation by 0.7%.
No, not what we want. So Canada responded. They said they're going to put 25% tariffs on $170 billion worth of US goods entering Canada. Mexico and China have said that they would respond, but have been a little bit vague on how they do that. However, Trump came out and announced that he was going to delay the tariffs on Mexico for a month as they, continue with negotiations.
Well, no, Mexico agreed to put 10,000 Mexican troops on the border to stop illegal immigrants and fentanyl coming through.
There you go.
That's at least what Trump said, and that's why he delayed it for a month as they negotiated a bigger deal.
So it was whiplash for the markets. At the time, the US markets opened down about 1.5% and then rebounded on the news of Mexico pausing. So if you were placing trades to try and take advantage of that, you would have been in a bit of trouble. But the Australian market,
for people who are new to this show, if you're wondering why Bryce is laughing there, he this year has set himself the challenge to take $500, turn it into $5,000, and he's doing it by trying to day trade the market. And we'll update in future episodes, but God, it's been a stressful.
Yes, it's been a stressful time. Volatility is good. However, the Australian market, it dropped 2% when it opened on Monday. Aussie dollar also hit a 5-year low against the US, buying just 61 US cents. Some of the big Aussie stocks have been hit. So the worst was Fisher & Paykel Healthcare, down 8% after it warned that 43% of its revenue comes from the US and 60% of the products sold in the US are manufactured in Mexico. So I think they'd have a bit of sigh of relief given that, that they're sort of on pause for the moment.
So I think really when we think about how Aussie stocks are going to be hit, it's going to be a mixed bag, and the majority of Aussie stocks at this point aren't really going to be too affected. Like if you are an Australian company that makes things in Australia and then sells them now in global markets into the US, at this stage you're okay. It's really those unique edge cases where you have a big portion of your revenue coming from the US, but your goods are coming from China, Mexico, or Canada, where you're going to be affected.
Yeah.
Fisher & Paykel is that sort of edge case where they've got massive manufacturing in Mexico, massive revenue in the US.
Yeah.
Another one to watch in terms of companies that will be affected are some of the mining companies that have big operations in particularly Canada. So Rio Tinto, they have a lot of aluminium, or as the Americans call it, aluminum, coming out of Canada that they sell into the US.
Yeah.
So Rio Tinto is going to be one to watch. Obviously, the question is how material is that Canadian aluminium revenue in the context of everything else. But on the flip side, there will be some winners. And, ResMed is one that is seen as a winner. They compete against Fisher & Paykel Healthcare in the sleep device market for sleep apnea. They manufacture in America. And so they're seen to be a winner relative to their competitors who manufacture a lot in Mexico and China. So I think for Aussie companies, it's not going to be massive at this stage, and it's going to be a bit of a mixed bag.
Well, at this stage, nothing's actually happened.
True. Yeah.
And I think that's the point. Like my reflection here is, and it's very similar to what he did in his previous term, is a lot of talk, a lot of hot air that swings markets around who take action on a lot of what is said, but does it actually materialize? And making investments based on these decisions overnight is fraught with danger.
It's almost like day trading isn't
fraught with danger.
The juice isn't worth the squeeze, and you should look at long-term compounding.
It's more like if Fisher & Paykel has been smashed 8%, but nothing eventuates on the tariff side, like it could be a decent buying opportunity.
Definitely.
That's what we should be keeping in mind.
Yeah.
So let's move on, Ren. House prices. Is it good news for buyers? Well, house prices in some Australian cities have fallen for the second consecutive month in January, led by falls of 0.6% in Melbourne, 0.5% in Canberra, and 0.4% in Sydney.
Break out the checkbook. It's time to buy.
It's not consistent across the nation. Prices continue to rise in Adelaide, up 0.7%, Perth up 0.4%, and Brisbane up 0.3%. Much slower growth, though, than what we were seeing over the last 2 years in some of those cities.
That's just for the past month, though. So
true. Sydney,
Melbourne, 2 consecutive months of falls. You might be thinking that's good news if you're trying to get into the market. And if you're reading the press, they're certainly painting it as good news. And the narrative is we've seen this fall, but rates are about to get cut, and that's going to lead to a whole lot more buying. I would just temper both sides of that narrative. First of all, everyone is almost guaranteeing rate
95%.
Rate cut in February.
It's crazy.
But again, like if the Aussie dollar keeps getting smashed, if underlying inflation is above 3%, it's just people are too confident in their prediction.
Yeah.
But also, house prices haven't been smashed. There's 2 months where they've fallen slightly in some cities, but I just want to zoom out. Because over the past 12 months, Melbourne has fallen. So Melbourne is the outlier, down 3% over the past 12 months. And that's primarily because some of the changes they made to the taxation of investment properties and the like. But let's look at every other major city. Sydney, up 2.3%. Okay, granted, that's slower growth than we've seen over the few years previous. Still growing. Brisbane is up 10.6%. Adelaide up 13.1%, Perth up 19.1%. The house prices are still rising.
No, yeah.
Here's the most important takeaway though. Affordability, which is measured by using median prices and borrowing capacity.
Yeah.
Affordability is at an all-time low.
And if they cut rates, it's about to get even worse. Well, that would help affordability, but it'll be counterweighted on the other side with demand.
Yeah.
Yeah.
So I think it's Nothing structural has changed in the housing narrative.
No. So not good news for buyers.
No. But look, good news is there are plenty of ways to build wealth outside of Australian property.
Yeah.
And that's what we're exploring on the podcast.
Yes.
Now, speaking of exploring building wealth, one thing we want to touch on this year, Bryce has sought professional financial advice.
Yep.
Something that I'll probably be following on later. But the big news, Bryce, is you've given all your information over. They've put it into DeepSeek, and they've crunched the numbers. They've worked through it, and you've got your statement of advice.
I have, yes, delivered in PDF form. So this is, well, they actually said, do you want a binded copy? And the reason they say that is because it's 51 pages.
Wow.
Yeah, 51.
Have you read it?
No, I've started going through it, but like you obviously need to read it properly.
How bespoke is it? Like surely there's some of those pages are just general disclaimers.
No, it's pretty bespoke. There's a lot of disclaimers, of course. But a lot of it is, so it's like Bryce and Harriet, you should, blah, blah, blah. Bryce and Harriet, you should, blah, blah, blah. And it just goes through like everything. So
can you give us like one example of something that they've recommended just to give us a sense?
Like you should sell all of your assets and combine them into a single investment strategy, for example.
Oh, okay. So rather than you each investing independently?
Well, they actually suggest it should all be under my name. Because it's kind of counterintuitive, but it's like I earn more than Harriet, so I have the most tax to minimize. So having everything in my name, if it's a tax minimization investment strategy, means that I'll have the most tax to minimize. Oh, that's
interesting. Yeah, because one of the recommendations is that you sell everything, you put it into your mortgage, you then pull that out as a tax deductible income generating loan, and then the interest payments are tax deductible.
Yes, yeah. And it consolidates our investment strategy. But it's so that's one thing. Once I've read it all.
Yeah, nice. All right. Well, maybe we'll have to dedicate a whole segment.
But I think just put some timeframes to it if people are interested. That's been like 2 months to get to this point so far. Yeah, from day one.
So look, we'll keep unpacking it, but it's worth just saying if you want to follow Bryce and get professional financial advice, we have a matchmaking service where we'll match you with one of our handpicked advisors here in Australia. Head to equitymates.com/advice, give us some of your details, and we'll match you with someone who we think is suitable for your stage.
And if you want to keep up to date with all of the business headlines from around the world, we have two options. The first is to sign up to our daily newsletter. The second is that we have now turned that daily newsletter into a 5-minute podcast. So in 5 minutes or less every day, we'll send you the headlines. It's called Headlines
by
Equity Mates.
Headlines by Equity Mates. Look, search for it wherever you're listening to this, except if you're watching on YouTube. It's not on YouTube. But anywhere else, you can listen to it.
Headlines by Equity Mates. Check it out.
Mr. Beat up. Mr. Beat up.
I have the beat that describes that moment accurately.
Welcome back to Mr. Beat Up. This is a segment where we have Simon, Mr. Beat Up. Welcome.
Yeah, great to be here. Glad the segment's got another run for 2025.
Yes, he is looking at stocks that have taken a beating but are not completely out of the picture. Stocks that have been oversold or perhaps the market has overreacted. And we've had some pretty decent picks over 2024, but you've got a new one for us today. What have you got?
Yeah, so this is a really good one today. This is actually the most volatile stock in the whole of the S&P 500 last year, meaning it had the highest fluctuations in price movements. It actually got a brief mention in the last Mr. Beat Up segment, but I think it actually deserves its own discussion now. It is Super Micro Computers, ticker SMCI.
Nice. So for a bit of context, when you last spoke about it, just mentioned it in Mr. Beat Up. In fact, to draw the curtain back, you were pretty keen to do Super Micro last year, and we were like, maybe don't, because it was potentially getting delisted.
Yeah.
It didn't, full credit. At that stage, it was $18. Now it's 27. So up 50% already, but it is still beaten up. It's down 75% from its all-time high of $114.
So for those new to Supermicro, they design and manufacture high-performance servers, storage, and networking solutions for cloud computing, AI, 5G, and data centers. So right in that picks and shovels play for what is going on on with AI at the moment?
I think like for the layman's explanation of it is NVIDIA make these high performing chips, then Supermicro make the racks, and everything else that the chips sit in and actually power data centers.
Yeah. So one example of a customer is Elon Musk's xAI. They have the largest liquid-cooled AI supercomputer in the world called Colossus. 100,000 of these NVIDIA GPUs.
Well, but xAI is making 1 million cluster GPU, aren't they, this year?
Are they? Wow.
I think so. I think they've announced
I'm
that.
even more bullish now.
So basically,
question.
yeah, it's like, there was this saying when Supermicro was running really hard and in the early days of this AI hype cycle, I won't call it a bubble, but the AI hype cycle, the saying was first you buy NVIDIA, then you buy Supermicro.
Yeah, and
you would have done better. Just keep buying NVIDIA.
Yeah. So, good customer base, stocks up. Why is it beaten down?
So they had this incredible run during the AI boom, 2023, early 2024, but it's come crashing down to earth since then. So it went all the way up to about 119 in March. A big catalyst was that in August, Hindenburg Research, famous short seller, came out with a bombshell report. They alleged there'd been accounting manipulation, undisclosed related party transactions, and also sanctions and export control failures. The next day, Supermicro then delayed its filings of its Q4 financials. Then in October, the auditor, EY, they resigned. They said, we're unwilling to be associated with these financial statements. Rumors of potential NASDAQ delisting started swirling.
No, it wasn't rumors. NASDAQ came out and said, if you don't file properly audited financials, you're out.
So a real risk of a delisting. The stock got hammered, bottomed out around $18. It was also then dropped from the NASDAQ 100 as part of the rebalancing it does each year.
It went from 118, 119 to 18.
Yeah.
Like that is a massive.
That's a beat up.
It's crazy. Since then, the company have said it's conducted an internal probe, led by a special board committee with attorneys. Forensic accounting firm was involved, and they concluded there was no evidence of fraud or misconduct by the management. They've also hired BDO as a new auditor and received an extension from NASDAQ to file its results by Feb 25th. So the stock then bounced a bit on this news, but then again, recently it's been caught up in this DeepSeek-led AI rout, and it's dropped back down to $27.
Okay.
Yeah.
Okay.
I feel like we're not fully embracing all of Hindenburg's report because so they said accounting manipulation and then all the financial stuff blew up. The one that is interesting to me is sanctions and export control failures, because Supermicro have a history of not complying with
dodgy.
certain rules. They got caught selling to Iran in breach of US export controls, but they've also had like this really close tie-up with China in the years since, and people have questioned that relationship. There's been instances where there has been, Chinese spying technology found in their servers and the like. And it does make me think, so you know how the NVIDIA story has been playing out with DeepSeek, and people have been pointing to NVIDIA's Singapore sales, and they're saying that that's how the Chinese companies are getting NVIDIA GPUs through Singapore. And it's like, is some of the allegations that may come out as part of this whole investigation people buying NVIDIA GPUs and they're building data centers, they probably are trying to buy Supermicro technology as well. So for me, there's probably some pages of this book still to be written, but that's not what we're here to do, Simon. You're here because you think it's beaten up and there's a potential turnaround. So what makes you positive about the stock?
Well, I think just quickly on that point, I think for me that is the biggest thing which makes me nervous is if they get found guilty or they have been selling illegally to China, particularly with Trump's stance you're seeing on China and US manufacturing, etc. So I think that's definitely a fair point and a big risk. But for me, I just think this is a classic risk versus reward setup. It's risky, but the upside potential here is massive. Like before this happened, people were tipping this to go to $1,000 a share based on the sales forecasts. So if you believe their numbers, they actually do still have quite good operational momentum. So they published some preliminary results for this quarter sales, Q1 sales, and they're saying they're going to be between $5.9 and $6 billion, which is an increase of 180% year on year. I mean, that's faster growth than NVIDIA, which was astonishing at 94%. But for the full year, they're actually forecasting growth and sales about 60% plus. But here's the thing. They're currently trading at a trailing PE ratio of around 14 and a forward price earnings ratio around 10. That's less than half the S&P 500's average around 24. And, fast growing companies, it's not uncommon to see them 50 plus on a PE. So it's stunningly low valuation if these growth rates can continue.
So that is the financial side. It's obviously got some pretty significant tailwinds more broadly, though, with what's going on in AI.
Yeah, we probably don't need to talk too much about this. I know you guys did break down this quite a bit on Monday's ep, but it's undeniable. This is one of the hottest industries globally. McKinsey, for example, they're predicting AI-ready data center capacity will grow an average of 33% a year up until 2030. Then there's Stargate, the $500 billion. That's going to be used to build massive data centers across the US.
The next point that you've got here is probably the most important point because there's this huge compute spend coming, particularly focused around AI data centers. And the question is who's going to win share of wallet there? And your final point is competitive advantage.
Yeah, so competitive advantage, I think there's a couple of things here. There is a lot of competition in this space, but the pie is growing and they have a top tier product, which is in high demand. So their edge, Supermicro represent their edge in two areas. One is their speed to market. So highly customized solutions. They say they can move quicker than Dell or HPE, which are main competitors. And also they're known for energy efficient designs, which is a big selling point. Obviously data centers, they use huge amounts of energy. So anything they can do to cut costs and energy is going to be advantageous. But probably the biggest thing is their deep partnerships with NVIDIA. So as we mentioned earlier, they incorporate NVIDIA's GPUs into server systems for data centers. And Jensen Huang, he's CEO of NVIDIA. He spoke with Supermicro CEO Charles Liang last year at a conference in Taipei, and he described himself as Liang's long-term partner and Supermicro's best sales guy.
Nice.
And he also went on to say that the estimated $3 trillion poured into new data centers by 2030 would see demand for Supermicro computers solutions soar. And Charles and Supermicro, they're ready to take your orders and deliver.
Nice.
Yeah, it is interesting. I can see the logic. I guess the downside would be potentially it gets delisted again. Potentially you have to take some of the financial numbers with a grain of salt. If they don't get passed by a second auditor. So really 25th of Feb is their deadline. So that's what you're watching for. Some of the export control issues, you can see them getting caught. But similar to what happened with Iran back in 2006, it's probably just a fine. And it's probably not existential, as the regulators are pretty soft when it comes to
Have they given any
business.
comms on the delisting so far?
They haven't asked for an extension, which people are seeing as a good sign because actually in 2018, they asked for an additional extension.
Yeah.
So you'd think if they wanted an extension, they'd be saying it now. They wouldn't wait until we get really close. Yeah.
Okay.
Nice one. Well, let's watch this space.
Well, it's on
Certainly one to
record now.
track.
Officially on record.
yeah.
You did say it
Yeah.
last year.
Yeah.
But definitely one to watch. If you have a stock for Mr. Beat Up to get his eyes across, head to equitymates.com/contact. We'll make sure that he has a look at it. He's got a few segments coming up this year. Plenty going on in markets. A lot of volatility out there at the moment. Perfect for Mr. Beat Up.
Lots of opportunities.
Yes.
Opportunity.
Thank you, Simon.
All right,
Cheers.
well, we're going to take a quick break here. And on the other side, we're going to share some of the worst financial advice we've seen on social media. And given you're in the studio, Mr. Beat Up, why don't you stick around and you can react to it as well.
Happy to. Yeah. Sounds good.
This is not financial advice.
Welcome back to Equity Mates. We are now going to review some of the worst financial advice that is floating around on Instagram and TikTok.
Yeah,
Ram. I
yes.
haven't seen these videos. Simon hasn't seen them.
Boys, as you know,
Let's see what gold nuggets are hidden in here.
Boys, as you know, my algorithm is pretty cooked, and I've got 5 videos to show you today.
Okay.
Dispatches from the other side of financial content. I've got a couple of miscellaneous ones, and then I've got a theme to close it out, and the theme is time is money.
Nice.
Before then, here's the first one.
When my wife asks me, how'd you do? And I say, we got completely and utterly wrecked.
if I say we lost 22 or I say we lost 30, there's no difference in those two things. See what I'm saying? So it's a free roll of $8,000. And what if we get a dealt full house followed by a dealt royal?
What?
What do you reckon of that logic?
Nice.
If you're down 22 grand and you got to tell your family there's no difference between being down 22 or 30, so you may as well go for it.
Yeah, there's some truth in that, isn't it? I think there is some stuff psychology around. Is it loss aversion? If you've got bad news, deliver it all at once. If you've got good news, deliver it in phases. Because people will just accept the bad news. It doesn't matter how bad it is. It's just bad news, right?
But Simon, by that logic, why stop at 30? Like, if you've got bad news, why not go to 50?
Well, you've got royal flush coming. Just keep going.
All right.
He doesn't have loss aversion, though, that's for sure.
No, he's got whatever the loss inversion, whatever the opposite is. All right. Now, I know you guys both love crypto. But have you, and you both own Bitcoin?
Yep.
Have you thought about this reason for investing in Bitcoin?
This is the verse in the Bible that convinced me to buy Bitcoin. Proverbs 23:20 that says, buy the truth and never sell it.
Buy the truth and never sell it.
Buy the truth and never sell it. That's what taught me to buy ResMed. Buy the truth and never sell it. All right, so as I said, I've got a bit of a theme for these ones. The theme is time is money.
Okay.
Warren Buffett said, if you don't find a way to make money while you sleep, you're going to work until you die. So delegation is a huge thing. I don't cook my own food. I order Uber Eats every single day. I'm cleaning the house, cleaning lady, walking the dog. I have a dog walker. I pay all these people money to just get these tasks done and free my time. Because what it allows me to do, I'm clear-minded and I can use that time to make more money.
One thing we've learned is the best determinant of your wealth is your savings rate.
Yeah.
The difference between what you take home and what you can put to work.
Yeah.
Certainly that isn't the way to do it.
Like the piece of advice that is massively missing there is the second piece, which is
how you
he's
use
making
your time
the
to
money.
make more money.
It looks like he just goes to the gym.
Well, let's pause and eat Smackers. Let's pause there because we don't. As I said, there's a series because that's not the only time I've been given similar advice.
If you do not have a washer and dryer and you go to the laundromat and you spend hours at the laundromat, what a colossal waste of your time. I just couldn't imagine, literally couldn't imagine sitting in a laundromat for hours doing my laundry. Couldn't imagine it. When you can drop it off and pay them $10 to do the same thing. I've sat in laundromats before until I saw a sign that said, we'll do it for you for $10. And I was like, what?
What the hell? This guy's giving a full-on course as well. Who's paying for this? Yeah. So that's how they make their money.
So for people who are just listening on audio, that guy is presenting to a room full of people with a board behind him talking about doing laundry. Yeah. And it just made me think, if he's talking about wasting time doing laundry, what about all those guys in the room wasting their time listening to him talk about laundry?
I know. And again, where's the next piece?
Yeah, how to make money.
Yeah. Hustle verb. That was what his thing was called.
Both of these so far, it feels like if you're just starting out on your journey or growing a business, that this isn't right for you. But if you've got to a stage where you've got something that your time generally is going to be able to create a return on investment, then start outsourcing like your cleaning and this kind of stuff. But if you like just trying to build wealth from the beginning.
Yeah. I also think it's like once you have the money to start outsourcing all of those things, life is easier and building wealth is easier because you have the money.
Exactly.
It's like a chicken and egg thing. Yeah. I've got strong feelings about some of this stuff, but let's get to the last one because this is probably the most extreme of all of them.
Nice.
Okay.
Every day, I never cook. I keep an empty refrigerator. My dad's like, son, don't you think it'd be so much cheaper if you cooked? I said, no, not really. I said, let's talk about that scenario. Calling the valet, getting downstairs in the elevator to valet, getting in the G-Wagon, earning fuel, sitting in traffic on Biscayne, go to Publix, trying to find a parking spot at Publix, getting out, looking around the store for what I want, getting the food, all the ingredients, going home, parking again, going back up the elevator, getting the pots and pans out, cooking, clean the dishes, clean the plates.
Oh, this guy needs to know about Woolies Online.
I know. What the hell? I wonder if he has an empty refrigerator.
Empty refrigerator.
Does he still run it? I wonder, because that's a waste of money.
That's a waste of money. If he's worried about money, probably the apartment with the doorman,
the G-Wagon.
There's probably a few.
Shopping
valet,
at Publix or whatever it's called.
There's a few expense lines that you could probably interrogate a little bit.
Unbelievable.
That was the best.
Oh, these guys. So I don't really see these on my feed, but this seems like there's a whole...
It's a whole thing.
A whole thing.
And the recipe is simple. Give shitty financial advice advice, get people to follow you, and then try and sell them your, membership or Discord or something where they teach you how to trade crypto or something like that.
Right.
Yeah.
Dodgy.
Dodgy. That's the whole world out there.
Yeah, well, that's why this segment's called Not Financial Advice.
But look, I think that if you come across this, just remember that study after study, time after time, the biggest determinant of your wealth is your savings rate. It's the money that you can put to work and then let it grow over time. If you want better advice than these guys on social media, and yes, it is always guys giving this advice.
True. Ripped guys as well.
Yeah, well, they imagine if they didn't go to the gym.
True.
Look at all the most wealthy people in the world. They get ripped after they get rich. Zuckerberg, Bezos, Musk. They were all nerdy guys until they made their money. Then they got ripped.
Yeah.
And that's what these guys are. They're doing it the wrong way.
They're doing it the wrong way.
The amount of time they're wasting. But yeah, no, the book, if you actually want to think about the relationship between spending and building wealth, is The Millionaire Next Door. That is better than any of these guys on TikTok.
Love it. Well, follow us on Instagram where we do a wrap of many more of those videos every Friday to close out the week. If you have videos that you'd like us to review for Not Financial Advice, hit us up at equitymates.com/contact. But otherwise, Ren, Simo, been great to chat as always. We'll pick it up next week.
Sounds good.
Sounds good.
You have been listening to an Equity Mates Media production. In the spirit of reconciliation, Equity Mates Media acknowledges the traditional custodians of country throughout Australia and their connections to land, sea and community. We pay our respects to their elders past and present and extend that respect to all Aboriginal and Torres Strait Islander peoples today. This podcast is intended for education and entertainment purposes. Any advice is general advice only and has not taken into account your personal financial circumstances, needs, or objectives. Before acting on general advice, you should consider if it is relevant to your needs and read the relevant product disclosure statement. And if you're unsure, please speak to a financial professional. The hosts of this podcast and their guests may have positions in the companies mentioned. Equity Mates Media operates under an Australian Financial Services Licence 540697.